Good morning. Welcome to the first Friday in October 2015. I want to welcome everybody to the How to Make Money Trading Stocks webinar. This is Dennis Wilburn with the Active Trend Traders. Joining me from Zurich is Michael Bishop, and from Dallas, Texas, Mike Traeger. So, Mike Traeger, how are you doing today?
Good, good. We're good. The weather's cooling off here. It's a good thing.
All right, Michael, how about you?
Fine too. A little
Okay,
bit cold, but sunny, so
it's
could be
cold but
better.
sunny. All right, that's a good combination. Now there there is definitely a feel of fall in the air here in California, around the Bay Area, and I won't say it's come early this year, but it's really interesting. It's nice to be able to not have to use the air conditioner. So let's get going. I want to remind everybody that everything we do cover at the Active Trend Traders is for trading purposes only, and traders should always paper trade any new method prior to the risk of their own personal capital. Um, we provide a lot of training at Active Trend Trading every Wednesday night at 6:30 Pacific time. We do a what I call a midweek market sanity check training session. This past week, I think, was an absolute excellent training presentation. I mean, in fact, I feel that way so much. I have invited anyone and everyone who wants to see that full training can go to the Active Trend Training website and view that and download the training slides at no charge whatsoever. It's just, my gift and Mike Traeger's gift to you, and I'll show you where to find that. It is, just go to the front page of the activetrendtrading.com, and it is under the blogs, and it's called Midweek Training Back to the 8. And just click on that, and it'll come up, and you can watch the video and also download the presentation slides. This coming week, we're going to be talking about applications with the Active Trend Trading System, and here's some of the things that we provide, that we are currently providing to our premium members. So last week I was just so excited. The Pope was in town, and Janet Yellen spoke. And Janet spoke, and the markets dumped. It was really a lot of fun week. Well, this week hasn't been much better, guys. I consider this week kind of a real sloppy week. And as we speak right now, the floor is held, but will the floor continuing to hold is what we're seeing transpire over the past week, just merely going to be a relief rally back up into levels of resistance, and then a rollover and give us another opportunity to take a downside trade. But this morning's action I found extremely interesting, and we'll talk about that when we get to the charts. But S&P put in a beautiful knee-jerk reaction this morning to a crummy employment report here in the U.S. NASDAQ, very interesting, strongest index, or would it be better to say the less weak of the indices? And then the Russell, basically came down actually this morning and retested its swing low, and is currently in a little bit of a rebound mode. And so some of the outside influences, earnings season is upon us, and so we may start seeing some fast pre-earning moves to the upside by some of the stocks we follow. We'll be keeping an eye on that. But still, there is an overarching concern about this, the major concern over global growth. And I know here in the U.S., I think in Janet Yellen's speech in her news conference after the Fed decided not to raise rates was when she was kind of admitting to the world that there's another set of numbers that they're also considering, because the numbers that they report with regards to unemployment, inflation, all that kind of stuff, are made for public consumption. But you dig a little bit deeper, look under the hood, And I heard this week that in reality the unemployment rate in the United States, rather than being down at 5.1, was actually up at about 20%. Mike, have you done any research on that?
No, I haven't. I certainly haven't seen that 20% number. But there is another number that has been, fairly well known when you look under the hood, as you say, for several years now, and it's called the U6 unemployment number, and that particular metric looks at people who are maybe employed part-time, but they want to work full-time.
Right.
And that number is about double the BLS number. The BLS number is 5.1, and the U6 number is somewhere between 10 and 11%. That's considered to be a little more realistic.
Yeah, go ahead.
Go ahead. I'm sorry.
I was going to say, Mike, you could have left the L out of BLS.
Yeah, well, yeah, and I often do. But not in mixed company.
Okay.
And certainly that U6 number, was even higher when things were worse a few years ago. It was up in the, 15, 16, 17% range when the BLS number was around 9 or 10%.
Yeah.
But still, it's an indication that, things are not as good as some of the talking heads on would like you to believe.
Yeah, right on. So because the Fed did not make they decided to do nothing at their last meeting, our interest rates are still hanging over us. And if the market, depending on what the market does, I think it will be a big determining factor on what happens with the interest rates. And so we basically have two more bites of the apple, if you will. Between now and the end of the year, one in the October Fed meeting and then one in the December Fed meeting, because they typically don't provide a meeting over the Thanksgiving or in November. Yeah, maybe that is something to be thankful about. Here's where the percentage of stocks above their 20-day moving average on the NYSE was last week, right here. It had just made a little rebound off the 30. Well, guess what happened? The rebound didn't last very long, and we've now dropped back down below the 30, but we're posturing with a potential higher low. And so we'll talk about that a little bit with some of the positive divergence that has showed up a little bit on some of the index charts, and there's a really good example of a positive divergence if we take a look at the Russell chart, which we will do shortly. But before we get to that, what is the next slide? Michael, it is your turn, my friend, and today you're going to say, to basically provide us information about what can you learn from Warren Buffett. Do you think Warren Buffett collects his Social Security?
I would doubt it.
Okay. Anyway, go ahead, Michael. Do you need the mouse, man? I will give the mouse to you.
No, I don't think so.
Okay.
Well, just to give you some background, quite a prominent block here in Switzerland. It was kind of more an academic presentation. Showed again how important it is or how beneficial value investing can be, and of course the implication was, if you want to be as successful as Mr. Buffett is, you have to do value investing, and I think there's really a lot of material out there, and what you could say is that Warren Buffett is an excellent businessman and an excellent money manager. but I wouldn't say that he is such a great stock picker, and also not. And I think it's really fair to say overall his performance would have been comparable if he would have done just index investing or momentum investing.
Okay.
Because I mean, he's really big big achievement is that he got a lot of cash, especially from his insurance business, and he invested the cash in a clever way, meaning he could basically all the time use leverage. There are some estimates that over time it has been about 1.7, a factor of 1.7, and he also did a lot of option writing strategies so that he gets the stocks he anyway wants to buy at an appropriate time when it gets cheap. And all these are, I mean, concepts I think a retail investor or most retail investors just don't have the time and the mean to invest this way.
Okay. Yeah, I understand. Before you get to point two, I understand that Warren Buffett does write a lot of covered calls.
Yeah.
Yeah. Interesting.
And naked puts.
And naked puts.
Yeah, definitely.
All right. So
of course it's not fully disclosed, but you see it in different reports, at least in the past.
When Berkshire bought Burlington Northern Railroad, he sold a ton of puts to help pay for that.
Okay. Wow. You mean when I sell puts, I'm investing like Warren Buffett?
Yeah, let me know if you're going to buy a railroad.
Okay. Go ahead, Michael.
Yeah, and the second, I think, very interesting question is why is he an underachiever or has he been an underachiever in the last 5 years? And I mean, one thing you could say, and there I read a nice paper from PricewaterhouseCoopers that they said in the last 100 years we had a couple of relatively short times where there were a lot of disruptive businesses around. So it's not really something completely new. And now with IT, especially the IT in the technology environment, and I mean the internet is really a big enabler for disruptive technologies, and so suddenly, I mean, IBM has a lot of cash, but Google or Apple that had 10 years ago much less cash were just more successful because they had the better technologies or they were the better they had the better feelings for new technology and new trends. I mean, there are many examples nowadays.
Yeah, let me jump in there really quick. So in other words, what you're saying is that even though a company like IBM has, a boatload of cash, the Googles and the Apples had the better ideas.
Yeah.
And also probably better marketing to some extent, but and then McDonald's, of course, compared to Starbucks and Chipotle, Starbucks and Chipotle started appealing to more of what people wanted. They had, in other words, the better idea. That's interesting. Go ahead, sir.
Yeah, and this is typically not a good time for value investing. And the same is, it's also not a good time, and that was the PwC study for, I think, for traditional careers. And it's not a good time for a couple of other things. And it's a shame that that the full name is not there. James, can you help me? Shanahan or something like that.
Okay.
What Works on Wall Street. It's really a big book. And it's one of my kind of favorite comprehensive stock book, because all basically what he's doing is he collected tons of historical stock data and made scenarios what would have been if you purely did value investing on this and that criteria, what would have been if you do the momentum, what would have been if you kind of take the best 10% in contrast to the second best 10%, and all this stuff. And I mean, and there you see that basically at the beginning of a bull market, value investing does really well, because people are a little bit, I think they get more and more comfortable with buying stocks, but first they want to concentrate on the safe stocks. And at the end of a bull cycles, they change to trendy stocks. So
right.
Momentum investing is the best strategy.
Okay.
And it seems that Warren Buffett style may be successful in another cycle, but in the current cycle seems not to be their appropriate strategy.
And that makes sense. So
yeah.
What's this chart here?
Yeah, the thin line is the SPY, and the other is the
it's a BR.
How
is the stock called of?
Berkshire Hathaway.
Yeah, okay. Berkshire Hathaway A shares.
Yeah.
Wow. So in other words,
and you have to, and that's an important factor. You have to consider that the SPY pays a dividend of, I think, in the last 5 years, always slightly more than 2%. And and Hathaway pays nothing, just reinvests.
Wow. So in other words, a person who could read the charts well and invest in the spiders would have actually done better than Berkshire Hathaway.
Last 5 years, definitely.
Okay, cool. That's interesting.
Yeah, then maybe we can just have a brief discussion about this. So I got the question what I think about US job report in advance. I think we covered that. And the second thing is that the China storm over? And I mean, it's a difficult question, but I would say that currently we have again a very US-centric market.
Okay.
And I think it does not, I think, so maybe temporary the storm is over, and but that has no, or I don't know if there are any implications for the other markets.
Okay. So could it be that at least because of the storm that has been brewing, that many overseas investors may be looking back to the U.S. market to plow their money back into the U.S. market because of the issues? Because we got a little bit of an updraft over the last couple of years, where people were taking their money out of China, taking their money out of some of the the European stocks, and rolling them over here to the U.S. markets, and that helped prop up the U.S. markets for a while. And I'll open that to both of you guys for discussion, but go one at a time, please. Mike, you got anything on that?
Well, I think that's it's good insight. I think it has been a factor in what's been driving the market the past few years, and and I do agree with a lot of the problems around the world that the U.S. market, as overvalued as it has been and remains, is probably it's kind of like the cleanest dirty shirt in the laundry.
Okay.
And that's and that tends to attract the funds that are leaving other markets. Now I do believe that's been a factor.
Okay. And Michael, what you asked the questions? What's your response to them? And a couple of folks have put in some comments and questions, and I'll get to that right after you're done, Michael. We covered the jobs.
Yeah, I think that currently the big money managers and the retail investors too are concerned, are nervous, and don't want to invest till they see that a clear button has been found.
Okay. Yeah.
And so I would so the scenario which is most likely is that the stormy times go on.
Okay. Yeah, I like to compare, and here's a comparison I'll use, is everybody's seen these hurricane tracks where, here you have the hurricane going round and round and round. And as it passes over, as the hurricane first passes over an object, it gets beat to death on this side. Then you go into the center, the eye of the hurricane, where it's calm, peaceful, seeming somewhat orderly. And just about the time you think things are back to normal, the other side of the hurricane hits, and then you get whipped from the other side. So that's where I think, and again, an opinion only, that's where I think we are with China, because underneath, for both China, U.S., and global markets, in reality, nothing really has changed. Is that a fair statement?
Oh, that's a real fair statement. I mean, just because, there's no headline news about China today, and there was, several days ago, it doesn't mean that anything's changed. Much like Greece. I mean, we don't hear about Greece anymore. The media has moved on to other things. Certainly the situation in Greece hasn't changed at all.
Yeah.
And in fact, I don't know if anybody ever pays attention. The prime minister, the guy who became the prime minister of Greece, and he became the prime minister, Tsipras, based on a promise that he was going to, get rid of all the austerity programs and work something out for Greece. And then he wound up resigning after he was kind of forced by the rest of Europe to cave into their demands.
Yeah.
He's been reelected.
Yeah, I know.
When he resigned, they had to have new elections, and the Greek public has reelected this guy. So, because it's not in the mainstream news doesn't mean that, anything's really changed. And the same is true for China. China is a much bigger deal than Greece, and the problems in China are far more they're just far greater than, we've been led to believe.
Yeah.
And it's not going away in a matter of a week or two or a month or two. I mean, that's going to be a long-term situation that's going to have ramifications that we may not even be able to see yet.
Yeah. So anyway, good comments. Michael, great slide. I love it. One of the comments that came in was, and this must be where I got this, Bill Martin just let us know that there was a comment on employment at John Williams Shadow Stats website, and he has...
That's a good website, too.
Yeah, excellent website, and he has the current unemployment rate when you take everything into consideration as of 10/2 at 23%. Then Jorge, great question or good comment, Jorge. Are we just, are the powers that be more or less just putting lipstick on a pig with regarding the current market? And that's a great comment, and also a great question. And so we'll have to see. I mean, maybe a better question is, would we kiss a pig if it had lipstick on it? I don't know. But that's another a discussion for another day. Michael, thanks. By adding in very valuable stuff. And oh, by the way, is this going to be next week? We're going to talk about short test of a robo-advisor.
Yeah, hopefully
Okay.
I can really give you there maybe even an online demo. I will check.
Okay,
And
awesome.
I also promise you that you get a picture with a smiling face.
Okay. Yeah, I appreciate that. Yeah, give me the picture with the smiling face. That would be good, and because he looks so serious, and I know. After talking and working with you a little bit, I know that you have a wonderful sense of humor, and so I just want that to come through to the other folks also. So the wild ride continues. Keep your hands and arms inside the ride at all times. And I just, I've showed this slide a couple of weeks ago, and guess what? It's still applicable to what we're seeing today. What are we seeing today? Basically, when I took this snapshot at 9 o'clock this morning, the Dow, the S&P, the NASDAQ, the Russell is down more than it was last week. One of the things that is very interesting is if you take the NASDAQ 100 and basically measure from the high of the year down to the very bottom of the valley from August 24th, that was a 19% move. Well, and it rebounded very rapidly, very quickly out of that, so that's positive. But at the same time, that was a huge move down. And oftentimes when you get to see those significant sell-offs, that take place over a short period of time, it provides a disruption to the market that takes sometimes weeks and even months to correct. And so the volatility may, I just put the may caveat in there, may continue moving forward. That's where right now trading from support to resistance is a really good idea because if any other, or even standing aside until order returns. Always remember, cash is a position, and cash is sometimes the best place to be. And I know Mike Trigger agrees with that.
Well, so far, even though you're earning virtually nothing on your cash, you are outperforming the indexes this year by being in cash.
Exactly.
And in a downtrending market or in a volatile, uncertain market, for people who get shaken out by that and scared by it and just want to stand aside, cash is a position, it is an opinion, and oftentimes not a bad place to be.
Exactly. And if a person wants to be trading, pick a strategy where you can take advantage of the shorter swings. That's where I like, strategy 3 with the active trend trader, where it's basically just trying to collect premium. It works really well because one, volatility goes up, and the weekly premium on some of the things we sell is very nice. So let's take a look at the S&P. Got a daily chart on the left, a weekly chart on the right. What are the charts telling us this week? Is one, I will highlight a couple of things on the daily chart. First is on Tuesday of this week, prices on Mondays, prices sold off. And then on Tuesday, we get this little spinning top doji, if you will, coming very, very close to the past level of support. So while it was coming close to a new low, the true strength indicator and the momentum was not, and was actually showing a little bit of a positive divergence. You'll see this a lot better when we look at the Russell, which we'll do here shortly. But we get a really nice rebound. We get what is close to kind of a quasi morning star type formation on a daily chart, and then we get a close back above the 8-day moving average yesterday, which with the active trend trading, that would be a trigger to get into a trade off the daily chart. And then today we get, like I said, this morning, the prices basically started down here. Actually started about here, fell a little bit more, and now have rebounded very nicely. As I was sharing with both Mike and Michael when we were getting ready to come on, is I'm pretty impressed that we had what could have been just a really nasty sell-off. I recognize the day isn't over yet, but we have a really, now we have a good definition of where at least buyers are willing to come in and support prices and then push them back up. Now, what are we running into very quickly, and I'll jump over the weekly chart, is basically resistance at the 20-day moving average, and then also resistance at the 1950 level, and of course, as the 50-day moving average continues to move down, that would also be a level of resistance. And ultimately, one of the things I can envision happening is the if we continue with the emotional, I could envision the emotional trading, I can envision us going into something like this. Back up to the highs or around the highs of this shooting star candle, and then a move up to there, and then potentially a move back down, with this level between just about 2020 down to 1875 being a new range for prices to move. The good side, the downside of that is it will probably be very volatile. The upside of that is that level of range on the spiders or one of the leveraged index ETF can be very lucrative to trade. It was several years ago that I noticed Mike Traeger trading one of these range-bound indexes, and I was just watching him going, oh my gosh, he's doing really well with that. And that was part of what launched some of the early warning stuff, right, Mike?
Yeah, that was my first foray into it, and that was October of 2011, I believe.
Yeah, and because I remember looking at you being very envious, going, wow, you're just jumping on that. You're not trading anything else except that, but it's bouncing up and down. Weekly chart, let's take a real hard look real quick. If we close where we are today, we would have a huge hammer. And one could say, and this is hammer at the end of a downtrend, although it's only been a 3-week downtrend, but that is a reversal signal. Look into this area here. All of that wick, however long this wick winds up being for this week, is a level of support. But as you can see over here, it can support it throughout that wick all the way back down to that low. I want to take a real quick look over here at the NASDAQ. NASDAQ was holding up better than the other indices, but it's putting in a similar type pattern, as you can see. We get a move back above the 8 on the dailies, coming off of a higher low, but it does have its resistance up here at the high of this shooting star, but then also resistance at the 20, resistance at this level here, about 4,300, and a less steep descending 50-day moving average. Again, we have a hammer on the dailies, which is are on the weeklies, excuse me, coming off, and so that's the side that supports that this is a relief rally. But we also had this bearish cross between the 8-week moving average and the 20-week moving average that has also been is still in effect, showing us that we are in and continue to be in a downtrend. So, and Michael or Mike, you got any comments on S&P or the NASDAQ?
Well, my comments are, similar to what I've commented on before. We look at the weekly charts here, and we still see some, space between current price action and the shorter term, weekly moving averages. And, at some point, that's going to have to be reconciled, and it's reconciled in a couple different ways. As happened at the end of August when price action pulled way away from those moving averages, we can see that it came back up to the moving averages on the weekly chart and then started to pull back down again. And, we had some price consolidation for a few weeks. And I think what we can expect now is a rally back towards the shorter term weekly moving averages, and possibly some sideways price consolidation until the moving averages continue down and meet the price action, and things kind of go from there. And that's the same way it played out after that big little mini crash in the end of August.
Yeah, and be aware that we are getting a confluence of two moving averages coming together. This is the 40-week moving average, which equates to the 200, and then the 8-week moving average that it's pointing down. And so that is also it's hidden amongst the candles there, but that is a level, a significant level of resistance that could come into play. Let's see if we switched over to the Russell. See, I wrote about the Russell last night on the after-hour market update, and as I said, I think the Russell perhaps may have the more significant potential upside, but it has to get back above, because it reminds me a little bit of a shakeout, but it has to get back above this level here, which sits at about 1102, and right now it hasn't done that. But we have had 3 successful retest, or two successful retests down here close to the previous low, retested again today, and on this chart I want to highlight a more traditional positive divergence that is going on, and I say traditional in that, and perhaps more powerful positive divergence in that here was this low took out this swing low, so we get a new low in the index itself. However, the TSI and the momentum are not putting in a new low, and so from a technical analysis standpoint, that would make this actually a stronger signal for a reversal than the other that we saw in the other indexes. And I don't know if that was Mike Traeger's phone or Mike Traeger. Are you still there?
Yeah, I'm here. I just turned it off.
Okay. So we talked about it a little bit on Wednesday, and that's still in effect, is it not?
You mean the positive divergence on the daily chart?
Yeah, and potentially being, since this is more of a traditional positive divergence, it actually could have greater, I don't know if influence, but greater significance for a potential turnaround on the Russell.
Yeah, I agree with that. I just not sure, what kind of turnaround it could lead to.
Yeah, yeah. And so another thing I want to show you guys here is that one is because we do have a lower high, a lower low, and this past high, lower high, but it now is a new trading range. I have laid on the Fibonacci retracements just to give you an idea of where things would need to trace back to, and if it does continue to rebound. If we get the shakeout, it breaks back above the 1102 level, 1102, 1103 level, and runs through the 8-day moving average, then there will be a potential of additional resistance here at the 38.2, and sure enough, there's the bottom of my candle, and then also back up here at the 50% retracement, which is already an established resistance line now from past lows, and that's what it broke out of last week to fall even further. So just keep that in mind, and of course the magic fib box, which is up here between the 38 and the 61% retracement. And oftentimes on a healthy rebound, it'll get back up into that area, and that oftentimes it's a an inflection point or whatever, because it's either going to go continue higher or drop down from there. So that's why I pay attention to those kind of things. I want to show you just real quick. Mike would like you to take a look and make a comment here on, I've got since we just finished the month of, I'll get rid of that, but we just finished the month of September, and this is the first couple of days in October. Here's the monthly chart, and as you can see, longer term, this monthly chart, this is one of it looks real close that this is going to cross. This is the 8-month moving average and the 20-month moving average. That looks like it's going to cross, which longer term, I tend to be a little bit, I'm going, this could really get ugly, after a, nice little bounce up, take the relief rally. But do you think the path of least resistance is still down, Mike?
Yeah, I do. Looking back on this chart, you'll see on the monthly on the Russell, the last time we had a downward cross of the 8 below the 20 was back in 2008. And we know what happened. We know what happened after that. And while I don't know, and I'm not sure I believe that we're going to, be facing another 2008 scenario, it is a bearish chart and a bearish signal.
Yeah, and I'm going to just hide the drawings here for a second.
I have not followed this very carefully, but what I am hearing is that on the days with a strong downtrend, we have high volume,
yes,
and on up days we have low volume, and that's certainly not a good sign.
Exactly.
Boy, I'm glad you mentioned that. It just triggered a thought in my mind, and it goes back. I was looking at my IBD last night, and we had a big update in the market, I think on Wednesday, if I'm not mistaken.
Yeah.
And you look at when you start looking at the inner pages in IBD, and they have the new highs and the new lows. So I was looking on that particular day, the day we had the big update, the number of new highs versus the number of new lows, stocks putting in 52-week lows and stocks putting in 52-week highs. And I think for the New York Stock Exchange, there were something like 3 or 4 new highs on the day and about 150 new lows.
Wow.
And, that kind of thing does not bode well for the overall market. And, we've talked before about how heavily the indexes and the index charts that we're looking at can be influenced by a relative handful of stocks. And you have to try to keep in mind that, in the overall market, it probably already is a bear market, even if we're not seeing that in the indexes yet.
Yeah, right on. Right on. So anyway, that's why I wanted to bring up this particular chart. I encourage everybody who hasn't seen it yet, please go to the website, check out that free, the training from last Wednesday night, because we talk a lot about the significance and literally the on-off switch for active trend trading using the 8-period moving average. And the thing that's awesome is it works on all time frames. And if we were to apply that here to the Russell on the monthly, we got to close 2 months ago below the 8-period moving average. It's maintained that. And what we also found, and we go back and restudying this, is any move back up to the 8 and almost on any time frame, either in a downtrend, is an opportunity to get short again or to take a downside trade. Whereas if you're in an uptrend, the way it works is it all retreats back to the 8 on the daily, weekly, or monthly charts. Can be opportunities to get long or into a positive trade. And it has worked out over and over again. And I know that what Mike also likes is that it can be an indicator to get into a trade and then be able to just ride that trade for a long term. So it ties back into what Michael was presenting on, is at the beginning of bull markets is a great time to be a value investor. And what we presented on Wednesday night shows you how to ride that trend, sometimes for months and in some cases even years. And so Mike, like I said, that was very valuable, a very valuable presentation on Wednesday night.
Thank you.
So, okay, let's see. Any questions on the markets? All right. Well, I'm going to finish off, and then we can get into looking at some charts. There we go. So. Path of, question mark, path of least resistance, could very well be. We'll see what transpires and where things go from here. The last week has been a very good week. This includes all things, closed and opens. I'm very pleased that we are, right now above where the S&P is by about 17% over, where the S&P is down, what was it, 8 or 9, and we're up a little bit over 9% for the year. One of the things for the active trend trading, we base our system on the 5 pillars of trend trading. We make sure people know what to trade, top quality IBD stocks and or index ETFs, when to enter, when to exit, what strategies we're going, I'm going to use, and what to expect. So basically what we've done is we developed the system itself, and then once the system was in place, then we started adding the specific strategies that we utilize. Right now I've allocated 20% of my trading capital to this strategy, 10% to this strategy, and 70% to this strategy. Of late, buying and holding and getting into stocks and index, we haven't done a lot of that simply because of the whipsaw that's been in the market. But anticipate that we'll start seeing additional strategy 1 and strategy 2 trades coming out in the very near future. Here's an example of what we're doing. with the index, with basically the strategy number 3. I bought the January 2016 IWM, that's the index, the non-leveraged ETF for the Russell, the positive one. Bought that back on approximately, when did I buy that? I want to say, oh, 430. There it is right there. And this is what I've been doing with it. I've just been selling calls, put in this case calls against it. And let me go back. Selling calls against it, and with the intent of replacing, basically paying for the underlying, and then once the underlying is paid for, then I can, it's just a matter of collecting, and I've got about 15 more weeks to collect on this, and as of this week, this was not updated this week, we do have our cost basis down to less than 0. In other words, now we're playing with the house's money. So picks for the week, no open trades in strategy 1 or 2, wealth and income generating. Now that we added the Tesla stock to it, the Tesla Leap that expires in 2017, our cash flow for the week was about $975. We had an early warning alert triggered up, and we are currently in a trade on the early warning system. Future presentation that I'll be doing tomorrow. I'll be presenting at the Bay Area Moneymakers in San Jose, talking about the strategy with weekly options. And then the 10th, I'll be presenting at Tops in San Jose, weekly options. Then I'll be off to Hawaii for a week, and then Golden Gate University, I'll be talking about patterns for profits. So I'll get more information out to our members on, when and where these, especially these two, will be located. If you want to come out and see the presentation, and for anybody who's tuned in with us today, I always like to offer a monthly membership introduction at a considerable savings, and I loved all the dialogue and chatting with the members who email me, who call me, just to talk about stocks. So that's it for this week, folks. Actually, I'm just sitting here taking a real quick look. Yes, the rebound is holding so far, with a couple more hours to go before an hour and a half before the market closes. I want to thank both Michael Bishop and Mike Traeger for being with us today. You guys are always, I see Mike Traeger just had to drop off, but they add extra quality to the fabric of what's presented, and I appreciate you guys being online. Michael.
Thank you so much.
And so
always happy to be here.
Okay, keep your A growing, and also remember, trade wisely, trade profitably. And now I'm up to look at some stocks. Whatever you guys would like to look at. Just let me get up a chart. Okay, let's see here. Okay. So great question. I'll hit this first. Judy, no, I have not sold half of that position. Mike and I are taking a look at that. That's a UPRO position that we opened for the early warning alert system. We're taking a look at that right now, and somewhere between 53 and 54 is a level of resistance, and so we may be selling half of that position in short order. We'll have to see. There would be nothing wrong with taking half the position off right now, because it is up into a resistance zone. And so that's with the early warning alert system. And Evelyn, if you want to take a look at one of those stocks, which of the one, I'll give you a couple and then I'll come back to you, but which are the two that you would like to look at the most? And UPN by Jorge. No, why didn't that come up? UPN. Jorge, UPN is not coming up. Or UNP. Okay. UNP. There, that makes a big difference. Okay, UNP, which is what? Is that United Parcel? So let's take a look at the weekly, the daily chart. We have now broken and moved back above the 50-day moving average, and so that can, this little movement back up here and a breakout above that high can now be utilized, especially if it gets it closed. You can start to use that for your platform, and then what you'd want to be looking at, Jorge, is right now, see how it's extended from the 8-day moving average. For the active trend traders, we'd want to wait for it to either wait for the 8-day moving average to move back to it and or for it to basically come back and drop to it and then go from there. You might want to take a look at the 1-hour intraday or 30-minute intraday, applying the same type of philosophy, utilizing the 8-period moving average because it may give you an indication of an earlier entry. But right now, you've got a little bit of good volume, slightly above average coming into it. But it does have, it has made a nice bottoming consolidation formation. So let's see where it goes from here. Union Pacific, thank you. And let's see. Okay, DAL, which is Delta Airline. I used to really like flying Delta. And I won't tell you why I don't like flying it anymore. There's Delta. Okay, it's getting a bounce here off the 40-week moving average, which equates to approximately the 200. But as you can see, we've got a band of moving averages here that are all consolidating. We've got support down here at the 43.62 level. And it made an attempt to move up, but on lower volume. So I'd be looking at, if I were going to buy a piece, I would be in one of two places, either back down here testing support at the 43.56 level, or waiting for it to move back above and close above the 8-day moving average. AOK, which has been on my watch list, and I think a better performer than DAL with more positive, potential to the upside, but it's giving in a similar pattern. Bouncing off the 50, that's good. So, if you were to look at the two stocks, Alaska Air is stronger than DAL. Now, is it going to continue to move up? We'll see. Looks like some of the momentum is falling off on a weekly basis, and then one more aircraft stock. And Michael Bishop, do you have any stocks to look at today?
Not really. What I recognized is that Yahoo got a big upside move, which is very, very seldom.
Yeah. So of those,
and the casinos, MGM. It's also in a nice, or I think that's a good. Or at least I put an iron candle on it.
Okay. Here we got JetBlue. Of the three that you provided, Evelyn, JetBlue, of course, looks the best, and it also happens to be a lower price stock. If you get this closed back above the 8, then potentially we're going to move back up, or about to up. So what are we looking at? We're looking about from 26 on up to, it may, test up there at 27.43. If it breaks out from there, you should have, pretty clear skies. It's making a really nice bounce off the 8-week moving average. And just wondering if volume is going to come in and play any role whatsoever. And let's see here. Thank you. BAC, Bank of America. We'll get back to, of course, you got to be, there we go. Okay. And interesting formation here. This stock doesn't move a lot, but it is retesting down here at its lows. And it appears as if it may be wanting to turn around on these lows. Like I said, it doesn't move a lot. Let me get a what are the expectations? Well, if you picked it up here at its lows, the move to the top, well, it's a 26% move, which is not too bad, but it is a lower price stock, but it does have wonderful, daily volume. And this daily volume, even though this is a down day, since this is looking like it's going to turn out to be a hammer, it's basically telling us that buyers came in at the 1460 level and have pushed the prices back up. Now, is it going to get back above the 8? We'll see. And again, this is maybe one you want to go to the intraday chart if you're interested in trading, but this is a low, and be aware it has earnings on the 14th. And so who knows, it may do a little bit of an early run, but it's stuck in this trading, sideways trading channel, has been that way for, probably a long time. Yeah, going back to hit its high back in 3/17 March of 2014. Okay. Union Pacific, PCMI. Okay. What's the ticker on Yahoo?
YHWO.
Okay. This is. Yeah, interesting rebound here, Michael. I mean, it has clearly been in a downtrend. And let's see, and you could play it as a downtrend, but this does point out something. If this break above and close above the 8-day moving average here holds, what are the expectations? Well, the expectations, if it doesn't get past the 20, if it does get back to 20, the expectations would have been to run from the breakout here back to approximately to where the 50-day moving average would be at some point in the future. So let's say, so that could be, like a 10% run to get back up to the 8. Does its history tell us that that's what it will probably do? Well, since it dropped out of the sky back here in May of this year, it hasn't gotten back up to the 50, but this may be the capitulation move down and now a move back up because buyers starting coming back into Yahoo. Looks interesting on a weekly chart. If it does another retest down about the 28, that might be interesting. Or, as you said, I think you did a spread on it. Okay. TMUS, what are they? What do they do? A nice uptrend on the weekly chart. Came down and tested at the 20-week, bouncing off the 100. And it looks as if, depending on the volume, it may be moving back on up to just the 43 level. Again, this is, I'd have to do the market, T-Mobile. So being a Verizon guy, I don't know if I could invest in T-Mobile or not, but they do have cute commercials. Just joking, Jorge. Although I am a T-Mobile guy. But yeah, I mean, good daily volume. And, it may get a rebound back up to here, but it is in an uptrend, but it's a real, as you can see by the wide and loose candlesticks, on a $40 stock to have this, almost somewhere between 7 to 10% moves on a daily basis, that's, showing us that it's a little bit, whippy, and it could be challenging to trade because of that whippiness. So, okay, folks, I'm Michael. I'm going to call it a day.
Cool.
And thank you so much for joining, folks. Thanks for joining us, and also, please take a look at that training. I think that it will be very valuable to you. Have a wonderful week.
Will do. Program for weekend.